Morning, this is Wayne Below with another Smart Profit Maximizing Moment. Let me get my head in there somewhere. Apologize for the last couple days. I had needed new air conditioner. We're in El Paso, so I didn't get here early enough Tuesday. And then yesterday we had internet problems here. Low spectrum sometimes. I'm going to talk about, I told you I was going to move on, but things keep moving, especially in the PPP front, and the EIDL has some new rules. So I'm going to have some updates. And today we're going to talk about the PPP Loan Forgiveness Program. Okay, look, they made it relatively easy to get a loan. Yes, I know that sounds like I'm being sarcastic. I'm really not. If you've ever gone through a traditional business loan process, this eliminated a lot of steps, especially dealing with the SBA. As I told people, getting a loan is going to be the easy part. Getting it forgiven is going to take some work if you want to do it right and avoid trouble. All right. And some rules have come out. So let's talk about this. First of all, let's update something that I said that has been, the IRS has stuck out some regulations that changed what we thought. All right. They didn't change it. They went around the corner a little bit. All right. Originally, the law said that the PPP loan is non-taxable. Still true, non-taxable. But the IRS put out a regulation earlier this week, I want to say Monday or Tuesday, or last week, heck, I lose track of time, it's all flowing, that basically said, yes, it's non-taxable, but any payroll expenses or other expenses you use these funds for are not deductible. So yeah, it's non-taxable, but it basically eliminates a tax deduction on the other side. And that's pretty consistent with IRS policy in the past. So that's one update to correct something I did before. Look, once you get the loan, a clock starts ticking. So when you sign the loan documents, you have 8 weeks, all right? At the end of 8 weeks, you usually got 6 months, but I would say give yourself another month to 2 months tops to turn in a form to the bank that gave you the loan requesting a forgiveness. Now, as of yesterday, that form has not been technically released, so we may be creating it based on the general formats that had been passed out earlier. We don't really have rules and regulations yet. Okay, so we're going to talk about some things and what my estimate is going to be right now, because one of the things you're going to want to do is sit down after a couple pay periods. Let's say you got funded last week, wait a 2-3 weeks, and then make a decent estimate of how much you're going to have that you're going to use and how much you're going to end up turning into a loan. Now remember, the loan, you have 6 months with no payments, and the loan starts in the next 18 months. Whatever's not forgiven must be repaid with monthly payments at a 1% interest rate. Okay, so what is the amount forgiven? Well, first thing you do is you add up all the salaries, wages, commissions, vacations, sick pay. Bonuses, from what I'm talking, do not count, so you can't bonus your way into it. These conversations are with a local banker and an SBA officer that he got the information from. So, this is not official. This is what we're thinking at the moment. All right. So bonuses do not count, but nothing stops you from hiring people. All right. Matter of fact, that's the intention of the law. So if you were to hire your spouse or your kids, you got no problem as long as they're really doing work. You still have all the other rules that you need to follow. Don't commit bank fraud. I expect these things to have a decent audit rate somewhere along the line. You add group health insurance, including shareholders' health insurance. On salaries, one of the questions I got was, what about officers' pay? The goal was to keep people working, and because even speaking with the banker and the SBA officer, because it's offered to self-employed people can actually get the PPP loan, there doesn't seem to be any reason that it can't be offered for officers, especially if they were on the payroll last year. All right. But again, the goal is to hire people. So as long as they're working and it's not excessive pay, I don't think you've got any problems. Retirement benefit cost you add in there. Now this one's a little bit tricky. We asked for some guidance here, and we still don't really have any, but this was our best option. When you were doing your PPP application, one of the things you stuck in there was your retirement for 2019, all right? Now, the problem is you put the whole year divided by 12, multiplied times 2.5. There's some, the question I had and don't really have a good answer for was, do I, like if I have a SEP or a pension plan, or 401k match, I have by tax law to the due date of the return, including extensions, such as July 15th, could be September 15th, could be October 15th for a sole proprietor. All right. So can I take 2/12 of that? I'm kind of thinking no. I mean, I'm kind of thinking you need to fund part of it during this 8-week period, not all of it. I mean, if you put in $100,000 for all your employees for 2019, for 2018, for 2019 when you put the application, and you try to fund the whole 100,000 in that 8 weeks, I don't think you're going to be able to count it. We've kind of agreed you're going to divide that amount by 52 multiplied times 8, and that's more fair. And we kind of just kicked that one back and forth. They didn't have a good answer for me, but they agreed that seemed to be something that's less likely to be challenged, all right, if you were to be looked at. State and local taxes are also included in that. So that's the unemployment tax, that you pay to the state, any other taxes that go to the state that have to do with payroll. Also, now that has to add up to 75%. That's regulation. So if I get a $100,000 loan, 75,000 has to be on those items: payroll and payroll-related costs, health insurance, retirement, state and local taxes. 25% can be used on other expenses: rent of property, but it has to be on a lease that was in effect before February 15th. All right, utilities, and this was one of my main questions, and they're saying that it's not just the traditional utilities, gas, water, electric, but that you can put telephone and internet in there. They're not 100% sure, but I'd stick it in there. To me, that the traditional, it's almost impossible to operate without those things anymore, especially if you're forced to stay at home. So I think you kind of can. I'm not sure that actually falls under. I'm not sure that actually falls under that. So anyways, interest on certain mortgages of real property or personal property. So if you have a mortgage on your building, you can't deduct the payment, but you can deduct the interest. Now, you're gonna have to put together your application. There's rules. The rules are changing, is what I'm trying to get across. You're going to want somebody to help you with this, I really strongly believe, because you're trying to keep your business afloat. I don't think you have time to keep up with all these rules. The second reason is to make sure that you put together the loan application with the package so that it actually gives you everything that you need, all right? So that if it gets picked up and looked at, you don't want it to be challenged, all right? So it's like it has all the stuff you need. So you're probably going to need, and this is information from the IRS, it needs to be organized properly, but you want any payroll tax reports that were filed during that 8-week period, copy the payroll reports for the pay periods during those 8 weeks. If you're using somebody like ADP or some other payroll processing firm, they're going to be able to give you that documentation, all right? You're also going to want to attach the checks. So checks or proof of payment to the employees, or proof of payment to ADP or Paycheck or whoever or QuickBooks or whoever you use to do your payroll. Gross wages, including paid time off, which might be vacation, sick, and other paid time off, should be reflected. Health insurance premiums paid, you should have a copy of the bill and the checks, all right? Copies of work paper schedules and remittances to retirement plan administrators should be available. So if you're having a retirement plan, you're probably going to need to get something from the administrator and show how you calculated what you did. Copies of all statements for mortgage payments, rents. They're asking copies of lease agreements for real estate and tangible personal property should be presented along with proof of payment during the 8-week period of the loan origination date. Copies of canceled check statements, other evidence of utilities paid during the cover period. Look, every bank is going to probably want a little bit different. Get with your bank, but also, man, I tell you, for something like this, it's too important. You don't want to mess up the timing, and you don't want to mess up the amount that's forgiven. I highly recommend getting help. Hey, until next time, this is Wayne Blau saying, let's make this our most profitable year ever. Thank you very much.